Hi, this is Amy with the weekend edition of the Bulletin Board Heroes. It is Sunday, the 24th of September. Starting off with the FTSE, and here we've had a nice week at and above the 200-day moving average, 76.35, and above the old February resistance line, which was a key thing to be broken, because obviously that's blocked progress for much of the year. Below 76.35, then we're looking at the 50-day line and the floor of that rising trend channel from August, 75.25, but we're obviously hoping for a push through 77.90, that May resistance line, to take us up to 8,000, ideally by the end of next month. Obviously, this time of the year is not exactly the best time for the market, so the way we're performing at the moment is actually reasonably good. Going on to the DAX, and the DAX is probably struggling more than the FTSE at the moment. Just trying to hang on to an uptrend line there from December, and also the 200-day line, 15,500. Below the 200-day line risks and move down to that May support line projection, 15,100. Otherwise, we're praying for a push through the 50-day line, where we failed 3 times since the beginning of last month to get through that level, which is currently at 15,900. Through that obviously takes us up to the best levels of the year, around 16,500. RSI in the wrong place for going up, i.e. we've had triple failures for the RSI through the neutral 50 level, so at 40, not looking great in terms of holding the 200-day line and avoiding a meet of 15,100. The Dow is next, and here you can see that this market has broken a line of support from back at the end of October last year, 34,300, and heading quite quickly towards the 200-day moving average, 33,700. Obviously, one can't really rule out 33,600, which is basically June, July support for this market. And at this stage, the earliest we could say that we've got out of jail on the bear front would be 34,400 and that old October line. RSI at 35, so on that basis, probably still a day or two of losses before we hit the floor for the Dow. And once again, to remind you of the charting formation, head and shoulders in place since June. In fact, a head and double shoulders on either side, which is actually, I suppose, worse than just having the single failure. Moving along to Bitcoin, and here it's been a struggle over most of the summer. Price action basically died a death over the course of the last month or so. We've got a rising trend channel there, theoretically, from back in January. The floor of the channel there, 26,200, so ideally we stay above that. We've glanced off the 50-day line, failed there again for the middle of September. Failed at that 50-day line basically since the beginning of August, so that's not looking that good, and does suggest that we might have to test the post-June support for this market, 24,800, unless we get a proper clearance of that 50-day line. RSI still on the neutral 50 level, so some potential hope there. Moving on to gold, and here we were looking for a potential break to the upside, but unfortunately it has failed. It's a third failure at that May resistance line. We had a decent attempt back in July, but it just seems to be that this market is not good at being anywhere near that $2,000 an ounce level. If we break down further, i.e. below the 200-day line and that uptrend line from February, then it's back down to June support there, just around the 1900 level. Moving along to the stocks, and although there hasn't really been a great setup here for Ascent Resources, it looks as though there may be something going on, and obviously given the fundamentals here, you don't want to be missing out on any potential great news. At the moment, we made new lows below the April support there, 2.9 pence. Really need to see an end of day close back above that to give us a chance of heading back to the 200-day line level at 3.4 pence over the next few weeks. But just the first sign there with the deeply oversold state, the RSI down to 3 out of 100. Maybe there's something of a revival brewing at Ascent. On to Bluejay, where the fundamentals seem to be starting to improve. What's interesting here, that after the gap down during the week, then the shares have actually closed above the floor of the gap there. That's Thursday's peak around the 0.78 pence level. So above 0.78, looking for the shares to return to the 1 pence area, which was the pre-gap area. The lower low for Thursday, but higher RSI trace suggests that there is a bit of interest there Best case is that we get up to 1.2 pence by the end of next month. If you're cautious, maybe you want to see an end of day close back above the old August support there, around 0.85, but that closed back above the floor of the gap. Quite encouraging. Moving along to Cloudbreak, which is looks like it's trying to repeat the big rally that we had back in the earlier part of the year, the beginning of July. Massive move there. I think it was on convertible low note news, but here we managed to avoid going lower than June, which was around 0.35, and had a decent weekly close above the 50-day line at 0.48. Above that, looking for the May resistance line projection of 0.87 over the next 2 to 3 weeks. If we can get through that, then it could be up to as high as 1.5 pence, which is a February resistance line projection. All the while, we'd like to see the market really remain above 0.6, which was the last resistance on the way down, as opposed to just the 50-day line at 0.48. Moving on to chill, and nice break to the upside at the end of the week. I've been looking at this over recent sessions, and Thursday was actually the break higher, so broke through 3.9 pence. And the current position is we've actually closed back above the old August support there at 4.3 pence. Above that, we can see the shares as high as 8 pence by the end of next month. The only block at the moment really is that combination of the 50 and 200-day lines at 5p, so maybe that's something to watch out for. RSI back above 50 as well, so looks as though the shares are basically bear trap reversal from below August support. Moving on to a less high profile situation, but I thought I'd give it another look. Devolver, here we had the gap down back in the beginning of last month. We closed above that and the 50-day line earlier this month and made good progress from 20p upwards. Initial target here was 28 pence, and hopefully we get that over the next week or two. Best case scenario by the end of next month, up to 39 or 40 pence, which is the upper parallel of the rising trend channel from July. But the main thing here is staying above the 20 pence level and also enjoying the way that the 50-day line has now been rising for the last week or so. East Imperial is next. Here you can see that we are making good progress. V-shaped bull flag. We had a gap close buy signal during the week as well, and we've held above the old August resistance at 2.6, hitting our initial target at 2.8. Above 2.8, looking for up to 4 pence by the end of next month. So quite a turnaround there for the shares, and the upside certainly valuable while we hold above that August resistance. If you're really fussy, maybe you'd allow down to 2.4, but that's about it. I know there are a lot of people willing fusion antibodies to recover, and shares doing their best, I think one could say. Obviously a lot of supply there in this situation, but we've got an uptrend line in the RSI window that's been in place since the end of May, and we're bouncing off that. The shares have seen that particular feature. All that's missing now really is an end of day close through the 50-day moving average around 6.5 pence, and then that would take us hopefully back up to the 10 pence area by the end of next month. But it's been a difficult one because every time there is a rally, especially towards the 50-day line, the pesky sellers come back in again. On to Jersey Oil and Gas, which is looking quite well poised, actually. It looks like a bull flag there above a rising 50-day moving average. Quick bear trap below the 50-day line at 182 earlier this month, and closing above the 200-day moving average at 205. Above 205, we're looking for the top of the rising trend channel there from back in June, as high as £2.30. Well before the end of next month. We've got a bounce RSI rebound above neutral 50 as well, which should also help the situation. I think the only thing missing now probably is for the 200-day line, the black line there, to turn around to the upside as well. Optibiotix had a flyer this week off the back of the Boots announcement, unfilled gap to the upside, basically a bear trap from below the late July support there at 24 pence. Above that and above the floor of the gap at 23, looking for a move up to retesting the best levels of July as high as the low 40s by the end of next month. It's also good that we closed right on a sharply rising 50-day line. In fact, the 50 and 200-day lines still both rising at Optibiotix. Stock which we've given a lot of coverage for in the recent past has been Physiomics. Shares, I suppose, Fell back a little bit more than we would have liked after the push to the 200-day moving average and finished filling that gap from back in May. But at least we closed right near the 200-day line and above that around the 2.7 pence level, looking for the 3.8 pence area, which is the top of that post-April triangle on the daily chart. But let's see whether we can get decent closes above 2.6 pence on the 200-day line over the early part of this week. Another stock which has been a real flyer in the recent past has been Plexus, and it seems quite relentless, actually. Obviously, the rally here started with an unfilled gap to the upside, one of our favorite setups. And here you can see that one of our targets after the previous best case target at 14 pence, and hence the red line was 20 pence above 20. We're looking for as high as the upper 30s, sorry, the lower 30s there, 31 pence, which is a late 2020 resistance line projection. Ideally, we see the shares now remain above recent support at 14 pence, but we might even get away with 17 pence, which was the support area of the end of last week. On to Powerhouse Energy, which is still regrouping after the recent placing. You can see that gap down on the daily chart. Just the first hints here that we've got a rising trend channel base, so a double test of that uptrend line there from the end of June. That level is around 0.47. I think the placing was around 0.5, so we are back at the placing level. Above 0.5, looking for the 50-day line at 0.6, maybe over the next 2 to 3 weeks, but don't want to see any new lows there below 0.47. Another stock which has been which is always pummeled by the bears is Tern, and here we've got an interesting setup in the sense that shares are consolidating against a rising 50-day moving average, so good close to the end of the week as well, RSI through 50. That suggests that we should at least see a move to the 200-day line at 6 pence. And then maybe by the end of next month, we have a spike up towards 8.2 pence and the top of that rising trend channel from back in March. One of the summer favorites for punters was Upland Resources, and here, even though the shares keep sort of shifting along and delaying a new move to the upside, looks like we must be pretty close now, given the way that we found good support under 2 pence. And the longer we stay on the right side of 2 pence, the greater the chance of 2.8 pence retest by the end of next month. If you're really fussy, I suppose you wait for the September peak around 2.25 to be broken, but obviously that's giving away some of the upside. Moving along to the last stock, which is Zephyr, and here you can see that the shares have been, I suppose, bumping along the bottom since May. We've had double support in the recent past this month around 3.1 pence. We've broken above the 50-day line on a closing weekly basis, and that 50-day line also rising. So that gives us a hope that we will now head up towards the top of the rising trend channel, around 4.5 pence, 4.6 pence, also tying in with the 200-day moving average. But the real message here is we want to stay above that uptrend line there from July at 3.4 pence. That's it from me today. More updates during the week.